All right, welcome to the video where I explain how to fill out the third-party financing addendum if you have a VA loan buyer. So as a reminder, um, a VA loan requires no down payment, okay, for the veteran. So you will be focusing on paragraph 1D as in David here, where it says VA guaranteed financing. So it says a VA guaranteed loan of not less than in this case, $250,000, that's the loan amount, excluding any financed funding fee, amortizable monthly for not less than, typically it's going to be 30 years. Your term may vary, but we'll just say 30 years. With interest not to exceed X percent, I've put 6 per annum, so per year for the first 30 years of the loan, with origination charges as shown on buyer's loan estimate for the loan not to exceed 1% of the loan. So what's an origination charge? The origination charge is the fee that the lender charges the borrower to service the loan. And usually that's 1% of the loan amount. So if the loan amount in our example is 250,000, 1% is going to be 2,500 bucks. I've seen it higher than 1%. I have not seen it lower. Okay. And then there is a couple of more things to do here. So in paragraph 2, approval of financing. So it is one thing to be able to get the loan, in a pre-approval letter, but it now comes time to verify everything that the borrower has told the lender. All right. So that's what we do here, and it takes a while. I mean, I would definitely keep 21 days in there. A lot of times the seller's agent will push back and want it done in 14 days. I've seen 7 days when the market was really hot, but I would be very cautious in doing that. There's a lot of paper that has to be provided with the lender. Um, Borrowers aren't always quick about getting those to the lender. And so you want to allot enough time. So I would check box 2A here. Contract is subject to buyer obtaining approval, and I would give that buyer 21 days. And then you come down to paragraph 2B, which speaks to property approval. Well, it's one thing to get approval for financing here in paragraph 2A, but if the property doesn't meet certain conditions, especially for a veteran, then the deal can go sideways. And the most common reason for the property not meeting the lender's approval would be the appraisal. So if the home is $300,000 and the lender sends out a VA appraiser, because they're not going to lend money on a home that's worth less than the sales price, and that appraiser finds out that the home is really only worth $275,000, well, that would constitute the property not meeting property approval. Other things are insurability. Another common one is lender required repairs. So if the veteran is buying a home that is maybe older or hasn't been maintained, it is not uncommon for the lender to request certain repairs be done. So who does them and who pays for them? The seller. Okay, is the answer to both of those questions. And the seller doesn't have to. And if they don't, if they refuse, then the deal is over. All right, and that would mean it doesn't meet property approval. All right, so, and then it says, buyer, I mean, if that happens, the buyer not later than 3 days before closing date may terminate this contract by giving seller, number 1, a notice of termination, and number 2, a copy of a written statement from the lender saying why the property didn't meet approval. So it's important. If you have a VA borrower or an FHA loan, the language is still the same for a conventional loan too. But be mindful that you have only 3 days to get out if it doesn't meet approval. All right. And then it goes on in paragraph 4 and speaks to whether you have an FHA loan or VA loan. All right, so it says if the financing described above involves FHA insured or VA financing, it's expressly agreed that, notwithstanding any other provision of the contract, the purchaser shall not be obligated to complete the purchase of the property or incur a penalty by forfeiting their earnest money if it doesn't meet a value of this. Okay, so this is probably a bad example because the loan amount and the sales price are different. That's normally not what you're going to see in a VA loan. The whole benefit of a VA loan is you don't have to put anything down. Okay, but mind you, this is the financing, this is the loan amount, as I've put here, and this is the sales price. All right, so even though property approval and appraisals were spoken about earlier, a lot of times if a property doesn't meet appraisal, the seller will want the buyer to come up with the difference in cash. Well, VA loan or FHA loan, you can't do that. Well, I mean, you can, but that money can't be from a borrowed source. And a lot of times, if you have a VA loan and you're not putting any money down, you certainly don't have any money to come up with any difference in the appraisal price and the list price. Okay, so this is just another added paragraph in paragraph 4 that you have to address if you have either a VA loan or an FHA loan. All right, so again, this is the sales price, that's the loan amount. All right, and then obviously places for signatures. And that's pretty much it for how to fill out the third-party financing addendum for a VA buyer.